Good morning. How are you? My God, I haven't been here so long. It's good to see you, my friend.
What is it you'd say you do here?
What do I do here?
No, you're moving and shaking. Yeah, we haven't been able to book you on the show.
I know.
Because you're so busy.
It's been, I've missed that. This is one of my favorite times of the day. And, it's funny. It's like when you go away for a while and you come back and you look at that tree or that plant. It's like, oh my God, it's like grown.
I see you looking at my hair. You're like, you keep looking above my head.
Who can't? I'm down here, Pete. I'm not up here. Is that the old saying?
I had a teacher in grade school named Miss Shader, and every time it was like so surreal because like I had her, I think in 4th grade, and like every time she would be looking at you, she would be looking above your head. And yeah, I don't know what it was, but like there's something off-putting about when someone is just like staring directly above you.
You've got the beard and I mean, are you like showering with Rogaine or something? What's going on? You're like going full Sasquatch.
I don't understand.
I have not been able to spend the time.
Sasquatch.
I've not been
Sasquatch.
I have not been able to spend the time with you in the last couple of weeks. I would have liked, but Sasquatch. Yeah.
So this is what I look like to you.
The smiling one, not the sad one.
This one's smiling. Honestly, he looks like he just did something inappropriate and he got away with it.
Maybe that is more you. Yeah, come to think of it. No, the one the sassy guy. Yeah, look at him. He's proud to wear it.
Yeah.
He likes it.
Or what about this one? He's got a coffee. That's nice.
That could be
He
you.
looks more like a beaver or something. All right.
Brings you back to your Michigan school days.
I got really close to like Wolverine or something.
Yeah.
Or oh gosh, you didn't see this one, did you? There you go.
Oh, now
We're back. It's like you never left.
Now you've got a Christmas card. This is fantastic. How are you?
I'm good.
What is going on? You're a 118.
Yeah. You jump off the show for like a week or two, and the dollar loses like 5% of value against global currencies.
Oh my gosh, we've a little bit of pullback today, but the strength is.
So let's dive right into it. Let's get into the platform here. We covered Sasquatch in my gnarly appearance.
You refer to it as edgy.
This is so classic.
Non-public.
You and the rest of the olds are so good at this, where it's like you make fun of the person and then they.
What are the shoes?
What I've got?
He's got the new.
These are the
baby blues.
Nike Pegasus Premiums.
Okay.
You can't just get these anywhere.
That means anything to me whatsoever. Of course you can't.
But you guys are so good at.
You've got to order them online at a special place.
You and Clink and Terry and all these guys are so good at like making fun, and then like the person who's being assaulted is like, yeah, I know, like I've got like stupid shoes or like I look like an idiot, and then they're like, that's your words actually. You said gnarly, you said idiot, and it's like. Okay, but let's get into this
right,
because the dollar has been trading like a little bit of an idiot the last couple of weeks. But dare I say, the last 24 hours feels a little different. Yesterday, you saw the dollar give back more ground as we headed into the U.S. session, and it was like, oh my gosh, they're just going to beat the hell out of this dollar again, and we're going to be trading, like 119 by the end of the week. Pound's going to be up to 140.
This will be an interesting day because it's really your last full trading day of the week. Mm-hmm. We have half a day tomorrow. Mm-hmm. Now, equities open till noon, I believe. U.S. Treasury spot markets.
We're open.
We're open 24/5.
Right.
Forex never sleeps.
Come on.
Look at you. Maybe that's why.
Come on.
Look at you.
Yeah, that's right.
You don't have time to shave. You got to keep.
I'm literally aging.
Yeah. Yes. Welcome to the night sweats. But non-farm payrolls tomorrow, and then Friday is we're open, but
U.S. participants won't be there.
So it will be interesting to see with the last full trading day of the week. Is there a little bit more froth taken off, or I think this will be an interesting because we're starting down. We've dipped pretty good here.
Yeah.
For me, this is. if we end up getting down into 117.40, 35, it'll be the first lower low in this whole week of higher highs and higher lows. Boom, 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 boom,
And
up. So for me, right now, this is a time trade. We don't push lower in the next 2 to 3 hours.
And if you have shorts or dollar longs on,
You're probably going
maybe
to have
time to call it quits.
Yeah, you're probably going to have a hard time getting them back in, or you may want to take a longer view, chop the position a little bit, and then take the roller coaster.
Yeah,
of
if you
non-farms.
were trying to day trade or swing trade this week, and you've got dollar longs on from, again, and this was kind of my point, and you very eloquently noted this, where it's just like every sell-off the last couple of weeks, and this is the start of this week here, every sell-off has been met with more buying on the euro side, or every bounce in dollar has been set with followed by more selling. And just looking at the last week of trading here, obviously it's moving up and to the right. And as you zero in on the last couple of days, it has been like, oh yeah, they give back, 20, 30 points, and then they put in 100 points.
Right.
And it's like, oh, they give back like 10, 20 points, and then they put in another 50 points. This last 24 hours is the first time where it's like, they're taking this euro dollar down, 30, 40, 50 points, and they're not bouncing it back. We're not close to 119. We're getting closer to 117.
Right. Very short time frame, though. We didn't put in a new high at midnight there. When we got back above 118, it rolled back over. But this is going to be kind of an interesting inflection point. I think you'll get both sides to trade here. But it will get, I would imagine, and we'll see, with non-farms coming out tomorrow, probably it'll get a little less interesting the last half of the day.
Mm-hmm.
So the question becomes, can we do a little bit more damage down here and then make a decision?
Maybe that's why we're getting such good volatility, like I say, the last 24 hours, and seemingly right now, is because, post non-farm tomorrow morning, which is 7:30 Central, 8:30 Eastern, I think that losers club is going to set in very, very quickly.
Absolutely.
Like maybe by like 9 or 10 a.m., it's going to be like, oh, SPOOs are in a
I think
5-tick range.
If you get movement until 9 o'clock, it's going to be hard to stretch it past that. And again, it sounds conflicting when I say non-farm payrolls, because I'm the one who always says the number doesn't matter. Number doesn't matter. The markets will move off of it. So you've got to take that into account. With, if we get a really soft number, does that mean they move up rate cuts and the dollar softens a little bit more? Yeah, but it's not like softening from 112. It's softening from 118. In other words, euro is rallying from 118.
Sure.
All those things aside, you want to be in a position where, if you want to lean a little bit against this trending wise, that for me, it's like, because I get asked, well, you lightened up and it was good. The market rolled over. Don't you feel like you missed out on something? No, what I got myself is some optionality that if I was wrong and it comes out as a really soft number and we print 119.5, because where's the pain right now? Anybody's sitting on shorts in euro. If we print 119.5 and I still like my idea, I can add some there.
Well, because looking at the daily chart, and it's funny.
You've got no exit visas.
Well, it's funny. I can't help but what's been more relevant in my life recently, and for my ilk, is buying the crypto dip. And it becomes at some point when you're in a range like this, and I use Ethereum the last couple of years as an analogy, it becomes a rounding error of like, oh, I want to be long the 2200s and it's trading 2300, so I can't possibly buy it now. And then it trades higher, and it's like, dude, you were off by like a small fraction there. The trade isn't over.
0.1%
as you watch it, rise up to above 3,000. Same thing kind of here, where I agree with you wholeheartedly. The pain has been to the upside. If you are in a day trading or swing trading mode,
pays to the upside if you're a contrarian. If you're
exactly.
a momentum guy,
great
and
trades
again,
in here.
You can be, because it's giving you reasonable dips.
Sure.
You haven't had to buy breakouts if you didn't want to. You get 30, 40 points of pullback. Doesn't spend much time there. It confirms, and then it marches to a new high, which is all confirmation. If you're a momentum guy, you're adding to that.
But if you're
Works.
if you're a short-term contrarian trader and
This is hard.
and you're short even from right here, let's say right here is kind of a scratch, I would be looking for places to at least take off part of that position going into this long weekend, because the last thing I would want is, I mean, you get a little bit of a dip like we've seen, you know, like to your point with the momentum traders buying these dips and looking for further breakouts have been great. But we've seen plenty of, you know, Sunday night opens, and we're going to get one after a long weekend here where even the dollar shows a little bit of strength and then gets immediately pounded for the next several days. And so just something to watch for. We have some nice research on the Eurodollar that I want to get to just a second, but anything else in here interesting? It's nice to see that the major currencies that have been beating the dollar's butt the last several days are giving back some considerable ground here. Is the Kiwi and Aussie hurting your feelings like it's hurting my feelings? Because this market
won't go.
It won't rally, and it is immediate. It wants to sell off so bad.
and so, again, part of the thinking is, well, these are all basis against the dollar. They all have to catch up.
Not happening.
If you have a year-long time frame, I can say maybe, sure.
Yeah.
But don't think that as the euro breaches its highs and Aussie just rallies 7 or 8 points, what we're seeing here, if you practically look at it and remove the emotion from it, every time the euro stops rallying, it doesn't go down, but Aussie rolls over.
Yeah.
Don't get caught up that, well, it's cheap. Look at, when I talk about tape action, that's tape action. That's telling me that, yeah, they all get dragged, more so one than the other, to the upside on these dollar selling currency rally moves. This just isn't the feature right now. And it's not a, is it tradable? Absolutely. It's not a hidden gem of, boy, these are going to explode to the upside.
Well, what it might be a hidden gem of is if you are a contrarian looking to trade ranges, this might be your ticket, because every time we've gotten up to 60 cents here, we've rolled over.
You've got an 80 pip payout to the downside.
Yeah.
And if you're willing to set that expectation, this has been a rinse, Tony Batista term, this has been a rinse and repeat trade.
Since April.
It's worked really, really well.
Yeah, 100%. You're seeing, they did get up to 61 here. This is Kiwi yesterday, which nice, good for you, but they're now immediately giving back 0.5% here this morning. Totally agree with you. And as a last point, if you are a long-term trader, all of these things are obviously different. You're looking at maybe this Eurodollar extreme and you're saying, well, this is the high for the last couple of years. I like being short the 117s or 118s or whatever. You're getting paid the overnight funding for now unless the U.S. cuts rates. Right now, U.S. rates are double what they are in the Euro area. If you're taking that long-term view, obviously
what about
very
dollar
different.
Swiss, if you really want to talk about cheap?
Yeah, that is one of the cheapest dollars that you'll see across the board here, and getting just barely a bounce back. Yesterday, they got all the way down to
below 79
yeah,
cents.
they got below 79 for a second there. Right now, 79.30. But this is another one that you're getting paid, I think, a full point. Obviously, this stuff changes the overnight funding. And if you have a long-term view, maybe it's there for you. But yeah, to your point, Pete, if you're looking for short-term trading or you're looking for a short-term catch-up between the Aussie and the Swiss franc, it's been a really tough trade, and maybe something you manage expectations around this now and found tomorrow.
Yeah, and honestly, extreme-wise, this is when you say better extremes, this is just one trader's view. This is an interesting extreme. If you want to be short some euro, I would actually probably modify, lighten that up a little bit. I wouldn't mind being long some dollar Swiss too. Okay. I think at this point it's kind of the same trade.
Looks that way, just like in inverse, obviously.
Right. Right. It's kind of the same trade, but it may give you a little bit more bang for the buck if we do see the correction. But where do we want to go to? Slides?
Well, yeah, let's move over to the slides, because I have we've been doing some more research on this show. What about that? And I want to show Pete. We're not going to go into Glenn did some great Eurodollar research yesterday. Maybe we'll break into that if we have time, if we whip through this. But I wanted to show Pete some of the research. When's the best time to get long U.S. dollar? We're going to look at all the different major currencies against USD. Look at some different scenarios. Glenn has started to do more and more research. He's getting into the Excel sheets, Pete, and it reminds me of my early days. Remember when I sat next to you?
Yes.
And we would, me and James would be, you'd be doing, like more important stuff. And me and James would be doing research for your show and Tom's show and everything else. And we wore those, remember those umbrella hats? Because the sun would come into the studio and shine on us for like an hour and we'd get sunburned. Good times. Glenn now doing some great research. Because Pete, I don't know if you noticed this, but your U.S. dollars they're losing value compared to other. Inflation's down, so they're not necessarily losing value compared to goods and services in the U.S., but they're losing value compared to other currencies.
Yeah, these are dramatic moves. Again, 30-year average on currency moves is 2.2% up or down on average. We're 10%. Right now.
10% for euro and Swiss franc.
Yeah. So is this an outlier year? Yeah. Does it beg the contrarian? And I would imagine if you ran the 1, 2, 3 standard deviations, we're sitting well within the 2 standard deviation.
Probably around there.
Level. Statistically, so it begs, they've got to revert. Everything does revert, but from what point? There's elasticity in currencies. We've talked about this before. They tend to go further than what's reasonable and then correct. So be mindful on your location and be mindful that it can't go any higher because we could have had this conversation at 115, 116, and 117, and you would have been in a different spot.
And remember how did we get here?
Yeah.
Parity.
Right.
Multiple times in the last couple of years. And so when Eurodollar got down to 105 and everybody, we watched this happen 2 or 3 years ago. So many people flocking to this is a 2 standard deviation, 3 standard deviation move like we're at right now.
Spent a lot of time there though. And
we spent a lot and we got cheaper and we spent a lot of time there.
Right. Yeah. And we tried a couple of times, couldn't get any kind of rally in euro and everything. So the markets don't do what they did 15, 20 years ago, which go to an extreme, this massive, I forget what candle they call it, the key reversal or whatever. There's a Ikimuku something.
Doesn't matter.
Whatever it is. Markets are too liquid now, so they tend to price efficiently. We don't get that blow off, and then they sit, and they kind of wait you out.
Yeah.
Shorts get exhausted. It's just not going down. It's not paying me. And you capitulate. So how do you do that? You manage size and you look for products that are giving you other opportunities. Again, there's nothing wrong with being the contrarian here and the range trader in Aussie. And I think when you choose to do that is what the market, we always talk about this term and it's hard to quantify. What is the market willing to give you? Well, the market's willing to give you a range in Aussie, not so yet in euro. So be mindful of that.
I'm glad you bring that up because, we're going to look at these. It might feel like even, actually maybe especially right now, U.S. dollar is getting hammered. It's getting hammered against everything, and it's all the same.
Not so.
It's historically not so as we're about to see, and it's not even not so right now. If you look at euro, dollar, and sterling USD, that's going to look pretty similar. But if you compare those to what Aussie and Kiwi have been doing, not very similar at all. Even dollar yen, Pete. I know that yen has had some strong points the last couple of months here, but we're still trading 145. We're not trading 120 or double or close to double digits like we were a few years ago. And so looking at all these different pairs, looking at all environments, these are 30-day trading periods. So maybe for a little bit longer term trader, essentially
but
looking.
30-day range is a great range. If you are an intraday trader, it gives you scope around what you can expect. Now, there's always outlier, but it's a good period to look back on.
And we're going to look at essentially what happens after the dollar sees a down 30-day period, and then what happens if you were to look for a reversal in the underperforming dollar pair. So essentially, out of all of these, if I were to look for a reversal in the one that was the strongest against USD, how did that next 30 days act? And so looking at just all environments from 2019 until now, these are just the average 30-day moves. And so you're going to see a lot of unchanged. But obviously, the U.S. dollar has been strong against Aussie. And so you see that. And also keep in mind, these are reflective of the U.S. dollar movement. And so that positive 0.08% is telling you that the average 30-day move in Aussie dollar is actually down 0.08%. But if you were long USD, you've seen an average return of positive 0.08%. But you'd obviously have to be short that pair to be long USD. Obviously, the biggest example of what, if you're still saying, what the hell are you talking about, Frank? If you look down at the bottom, USD Swiss franc and USD yen, the average move in USD Swiss franc, 30-day move for the last 5 years or so, is obviously negative. Dollar Swiss franc right now is at 10-year lows.
Right.
And so the average move has been lower for US dollar, whereas dollar yen is still appreciably higher in the last 5 years. So the average 30-day move is higher than you might expect. But a lot of unchanged, kind of speaks to how these Forex pairs are mostly mean reverting. It's not like equities, right, where the average 30-day move for pretty much any equity index for any period of time is going to be higher, right, because the equity market drifts higher. You've got, euro dollar and pound and USD CAD not trending really in one direction or the other over from 2019 until now. Now, here's where we get some interesting data in here. When we filter for, okay, you've given me all the average moves for being long dollar from 2019 until present. Now, let's filter for if I had gotten long dollar after the previous 30 days was a down dollar move. Right. And what you see is some interesting stuff. One, in those commodity currencies, you saw a little bit of an edge to being long USD after a down period for USD. So mean reversion in that case, or solid contrarian play in that case. And what's funny is we just talked about this, and it's what we've been seeing, where if you were trying to get long USD the last couple of months, when the euro was outperforming USD,
you were frustrated.
Not great. But if you got long USD after a big up move in Aussie or CAD or Kiwi,
it worked.
You saw some mean reversion. They're saying the same thing going back 2019 until now. The other interesting flip side of this is if you're looking at pound and you're looking at Swiss franc, actually you tended to see a continuation of that move. So pound outperforms USD or Swiss franc outperforms USD the last 30 days. The next 30 days actually brought some more damage for the dollar.
Yeah, it's an interesting takeaway there.
Last piece in here, just looking at the worst performer. So essentially, we looked at all 7 of these pairs and said, okay, in the last 30 days, let me get long US dollar where it's been beat up the most, essentially, which in the last 30 days was the outperformer against USD, and let me essentially short that currency and long USD in that. And you saw some more outperformance in USD in those commodity currencies, and some of these actually flip, again, the continuation in that pound. But really interesting to see that USD CAD, if CAD was the outperformer out of all of these against USD, the average next 30-day move was a huge reversal in that pair, a huge upside move in the dollar there. So some quick takeaways here to get out of here. Dollar bounces back strongest against yen and New Zealand dollar. U.S. dollar weakness continues, as we've seen in euro, pound, and Swiss franc. Outperformance in Canadian dollar typically leads to a strong U.S. dollar comeback. We just saw that with that big stat there. British pound and New Zealand dollar strength continues when they are the outperformer. So a couple of interesting things. Essentially, you can see a nice contrarian move or a nice reversal for that dollar when it's been beat up against the commodity currencies. You haven't really seen that with the euro and pound majors. and a little continuation. If the stars have aligned in the past, where the dollar was down the last 30 days and a commodity currency was the really big outperformer, that's when you've tended to see a sizable reversal.
And what's great is I talk about market structure, and that's, and, you know, and I try to give context to it, but I'm sure a lot of people, well, that's very subjective. You're kind of curve fitting. You've actually added statistics and facts to that concept of what, I mean, the takeaway from this is what markets are willing to give you right now.
Yeah.
And that's a solid, this is really solid information in terms of looking at how do I start to contextualize what I want to get. It's really not what you want to get at.
How do
You
they
need to
tend to
align
act?
what you want to
Yeah.
get out of the market from not some thought of this is really cheap or really expensive, but what is the market willing to give you? And that's what's adding some context. That's how you start to productively engage in markets. Sure, it's opinion based, but the opinion has to be based on expectations. Again, if 118 is out of this world, we should be at 112. Again, if you're not trading over a 6-month period, you're not thinking about this correctly.
Yeah.
So this is great context. Good work.
Yeah,
Out of you guys.
Absolutely. Thanks so much.
All
And
right.
of course,
Don't touch the hair. Let the beard grow. This is all working.
I will try to. I'm getting a haircut on, I think, Tuesday or Thursday. We will figure that out. What
Let's wrap it up, my
we
friend.
will also do is wrap it up. Tom, Tony, and Bonetta coming up next. Have a great day, everybody.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
I want to play a game. It's a relationship game. So I'm going to ask
God.
you each a question.
Who
Your
loves
partner.
the hardest?
Yes, yes, yes. So are you